Hello everyone, Theunis here from South Africa, Western Cape, FX trainer for FXTM. As always, I just wanted to check if you guys can hear me. I see there's about 9 people online so far. Anton, Ezan, Sana, Sunday. Can you guys hear me? Can you guys see me? Checking from my side, everything looks fine. Usually I wait for about 2 confirmations before I go, just to make sure I'm not talking to myself. It has happened before. Azai, Ezan says he can hear me. Shop, fine. Anybody else? Guys, can you hear me? Can you see me? Just reply yes, or just put yes in the questions box. I don't use the chat box a lot. I think it's only one way anyway. Anybody else? Anton? Azai, Mohammed also says, can you hear me? Well, that's good, guys. Let's start this thing. Today is the last webinar of, for me anyway, the last webinar of 2015. 2019. Yeah, you can deduct. It's been a hard year, so it's also been a very nice year. I've met a lot of people, trained with a lot of guys, and I really enjoy it. I really enjoy the trading, the language of the market, and I enjoy helping guys to get to understand it. All right. Today we're going to talk again. It's a third installment of the process of building a trader's mindset. The first part I did just a brief overview of the whole process. The second part I focused more on stage or phase 4, when you get after you get the realization that you that nobody can predict the market and you don't have to, which is very good news. And then now is the third installment. The third part. I'm going to talk a bit more about how do we transition from the fourth to the fifth one, and what does the fifth one mean? How does it look? What does it mean in practical terms? All right. Again, short introduction. A lot of guys ask me, why do I every time just quickly go through the things and then go on? It's rarely that I have people that watch one or two in a series like this, a part 1, 2, or 3. So there's a lot of guys coming in from the sideline, and then by giving them a short introduction, then I get them up to speed. A lot of guys might have known the rest, and if they're interested, obviously they know then there's a part 1 and 2 as well, and they can go and listen to that. But for a lot of the guys, the intro is enough, and they can just get up to speed and get a lot of value out of this. That's very important for me. All right. Okay, so let's go. Very quickly, it's very important, really important, guys, to reflect on your trading experience every now and then. It's called a resting period. It's like a rhythm. Like every 7 days, in every 7 days you have days where you have a different routine. You rest a bit, you reflect, you think deeply. It's very valuable if we think in terms of how our brains work, how our brains was designed to work. The reflecting sorts out things, helps you to see clearly, just get a little bit of distance. So just for interesting sake, it sounds complicated, doesn't really that complicated. In quantum physics, they talk about the superposition. That's when you distance yourself and you look at what has been going on. So you get insight that way. So, and your brain sorts out a lot of things. It's amazing how these things are interrelated. But anyway, so I always try to make it interesting. Right, as you reflect on things, you get to see you see things. You might see perhaps gaps that you need to fill up, things that you have, places where you have questions, and that knowledge brings insight. So it helps you to see and to progress. Right, and part of that process is what we call the mastery process. You try, you learn, and you grow. All right, but before that starts to work, and this is a very important part, you have to get the basics right. If you try to learn to ride a bicycle, but somebody tells you you have to ride it facing backwards. So your basics is not right, you're going to have a difficult time learning to ride a bicycle. But if you get the basics right first, you get good advice. What is the basics? You sit up, sit up straight, and how you handle the bicycle, and then you start training from then on. Then it's simply a process of trying, learning, and growing. You rinse and repeat, and as you try, learn, and grow, in your brain, certain things start to happen. Muscle memory builds up. Long-term, short-term first, and then long-term memory happens, and then you can eventually master anything. That's how we mastered walking, talking, any skill, any language that we try to learn. Anything works the same way, and it's going to be the same with this business. The skill that we're learning, the language of the market, the skill is actually known as technical analysis, right? So what happens normally? Guys come in, they're clueless. And if they are, I always say this very, 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 um, I emphasize this, if they are unlucky, they win a few trades. What happens then if they're unlucky and they win a few trades, they think this is, very easy. And they take a lot of money, pull it in, and then proceed to lose it. If you are lucky, then you lose in the beginning and you realize you need some skill, you need to study. Right, so the first step is you're unconsciously or non-consciously incompetent, you're clueless. The second step is after you've had some losses, you realize, okay, this is a skill I need to learn, the language I need to learn, and you wake up. I call it the step 2, the wake up. Then you are consciously incompetent. You realize you need to learn, and this is this phase where you study. We start reading up. And unfortunately, a lot of guys get stuck here in the sense of that they don't properly get to know what is the basics. So they get stuck normally in the entertainment trap via focusing on indicators and methods and strategies, and that alone um, uh, is not enough. You need to understand what this is all about. Just one step back, the structure of the market. The problem with the indicators and all these things is you focus on the indicators, which is all lagging. And then you look for the Holy Grail. Like myself, spent lots of years looking for the Holy Grail, never found it. And until I met someone who told me, who showed me what the Holy Grail is, and that's actually getting that foundation that I talk about in process or in place, which is 3 things. So if you know what I mean, you can go onto the website and go and look there, foundation or the gift of online trading, recorded webinars. All right, so you study, which is a good thing. Which is a bad, or what is bad about it is lots of people try to take shortcuts. They don't want to try and understand. They don't get enough background. They try shortcuts, and that never works. You can't shortcut your brain. So you have to go through the process where you build physically neurological structures in your brain. As you learn, you repeat, and so on, just like riding a bike. Nobody else can learn to ride a bike on your behalf or learn to speak a language on your behalf. You have to take that and practice, right? The most exhilarating step or phase for me, I still remember the feelings I had, is when I realized, I call it the aha step. That's when you realize that nobody can predict the price, can predict what the market's going to do, and we don't need to. That's a huge burden that falls from your shoulder when you realize that. We are not ever into trying to predict what the market is going to do. There's just simply too many variables, and there's 2 things that happen. The fact is, the one fact is that there is just too many variables. The other fact is that the moment you believe what you think what the market's going to do, which is obviously a lie, then or not true, then your brain, the way our brains work, your brain starts canceling out a lot of information and zooming in and focusing on this fact that you believe is true. And that's why traders a lot of the times in this phase, they try something, and they when they've traded, and afterwards they see, why did I take this trade? It's because literally when you think you believe something, or you believe what the market's going to do, then your brain shuts down, blocks a lot of information which it deems unnecessary, and you only see what you believe you want to see. That's very, very dangerous. We never do that. We always follow the market. We listen to the market. Then what happens is, in speaking terms, we say the market might do this. The moment you say that, or the moment you've got that frame of mind, then it stays open. You will see all the options. That's just our part of our neurological makeup, if they can put it. Right, so once you have this major revelation, then you realize the market is not about predicting, it's about just understanding the structure of the market, the uptrends, the downtrends, what does it mean? And you've got then what technical analysis falls into place, and that is very, very simply, we look at price charts and we try to determine the early stages of an next trend. We stay, like Mark Douglas in the zone says so well, we stay in the ebb and flow of the markets. The markets ebb and flow, ebb and flow, ebb and flow. That's all we do. That's what traders, successful traders do. We focus not on every single trade. We focus on a series of trades, and over a series of trades where you take an early stage, we look for and you find an early stage of a next trend, and you take a calculated risk there, and then manage your risk well. That is the three fundamental things, basics you have to sort out and practice in and understand. Then it is quite possible to make a can never promise, but it's quite possible, most probable, to make a net profit over a series of trades, right? So very, very important. We get into the fourth phase then. Fourth step is we are constantly competent. We realize now what the basics is, and we start putting a lot of effort into our learning phase. We start practicing, guys, over and over and over. And the reason why I put this little beautiful slide on is that while you're in that phase, you're building your root system. You're building underground. Nobody is seeing anything, but your neurological networks are becoming strong. That muscle memory is building up. You are working, we'll get to the slide now, you're working all the fears out of your system, right? Other guys which might look as though successful, you never know, they might have a root system, but a lot of traders that brag about their trading don't have a lot of a big root system. It just looks like they're doing well. They might even be falsifying it, and then but it's not going to last. It's not going to last, right? There's 4 core mindsets that I talked about in the previous slide. The 4 fears: the fear of being wrong, the fear of losing, the fear of missing out, and the fear of when do I take my profits, how do I take my profits, which is the most difficult one if you start becoming proficient, right? That is why the foundation, or the foundation of online trading, that specific webinar is so crucial for me, because once you realize this, once you start practicing it, you lose these things. You lose the fear of being wrong, because you're not trying to predict the market anymore. You're simply listening, following the market, waiting for that early stages of the next trend. You don't fear losing anymore. You realize that a good trade's got nothing to do with a profit or a loss. It's got to do with, did we respect, did we see the overall structure of the market? Did we take a calculated risk using the wave structure of the market? Did we manage our risk very well? So in the sense of a good trade, losing then means I protected my account, which is a very, very good thing. Anybody who has blown his account understands the pain and the associated feelings with losing your account, blowing your account. It's not nice. So and also very important here, the definition of a bad trade. It's got nothing to do with the profit or loss. It's when you don't respect the market. It's when the market structures, when you don't take a calculated risk at that early stage of the next trend, and when you don't manage your risk. All right, missing out, we also lose that fear. We practice it out of our system by simply waiting for those waves. Like the ocean, the waves is coming the whole time. If you miss one wave, you don't panic and try to jump in. You just wait for the next one. That wave structure is there on all the instruments, as long as there's enough liquidity, where there's up and down trends, and all the time frames, right? You can miss one on a higher time frame and just go to a lower time frame and still get involved, depending on the structure there, right? And then very, very important, the fear of when to take your profit. It's very difficult when you've got an open trade and the market goes in your favor, and you don't know where to take your profit exactly, or you're unsure, you're using support and resistance, which is not solid lines, so you never know. So that's why we use a high probability profit, high probability risk management, money management, where we take our profits at predetermined levels. In this case, we use the Fibonacci. Most cases we use the Fibonacci extensions, because we know there's a high probability the market will go in our favor for at least a little while. If we take part of our profits there, we manage our risk, we lessen our risk, make our risk less, and the most important thing for me is when we make the mental pressure lower, then it's very, very easy to let the market just continue to ebb and flow, or to flow. It was in the middle of a beginning of a trend to where it starts turning around and you get the next ebb and the flow of the market, and then you take the rest of your profits, and you sometimes you get immediately another opportunity for the flow in the opposite direction. All right. These are mindset things, guys. These are things you can't just decide you're not gonna be afraid of wrong anymore. You have to practice it out of your system, out of your mindset. It got there for a reason. Um, in the normal sense, people you don't want to be wrong and so on, but regarding the language of the market, being a trader, you have to retrain your mind to think in a certain way. Just like when you become an engineer or a doctor or a plumber or a lawyer or anything, you have to retrain your mind to think in the way of that specific field that you're going on. This is for me applied economics. So right, and also very important. If you look at any person that's successful, this is what people see. Right, this is the phase, consciously competent, where actually what happened underneath. This is in the fourth phase, which these things happen. What people see is people that are already successful. They're already actually in the fifth phase, where things become automatic, but nobody gets there by a shortcut. You have to go through this phase where what people don't see, dedicate yourself, you work hard, you've got discipline, you're disappointed. Sometimes you go through up and downs. Even your own emotions and stuff has rhythms and patterns and stuff. You figure that out. You have failures, which is actually trying, and then you learn and you try again, and you grow, and persistence and so on. Very, very important. So if you know this, unfortunately, we have a lot of guys around December that want to trade. They've got some cash flow issues. They want to buy some nice presents for their people, and they think, yeah, I'll open a trading account and quickly make a lot of money. Just doesn't work that way. You can't quickly make a lot of money without putting in the effort, right? You must learn the language yourself first. Right, just a quick quote. Bruce Lee, former Kung Fu master. I fear not the man who has practiced 10,000 kicks once, but I do fear the man who has practiced one kick 10,000 times. No shortcuts, guys. Focused practice. You have to practice this one kick, this language, and this kick consists of three stages, like I said. This understanding, respecting the structure of the market. Second, waiting for that shift, that initial stage of the next trend where we take a calculated risk. And then the third one is managing our risk, getting those things in place and then practicing it slowly at first. And then as it becomes settled in your mind, as it goes from your short-term to your long-term memory, then it becomes easier and easier. And then we start adding the money, we start adding more to our funds, more lot sizes, and so forth. It's a mastery process that we follow. Another one, Eric Fromm, is a master artist. I shall become a master of this art only by a great deal of practice, discipline. It's interesting. Professor, the head of our education department was here for a couple of, actually an expo, traders fair, and a workshop, a seminar, and then 3 workshops, and then another seminar. We spent a lot of time together as I was a Plan B trainer. And I asked him the main reason why so many people fail, and his opinion was simply discipline. The guys don't realize the work involved. And just like going to gym, if you decide you want to build up your body, it's not going to happen overnight. You have to be disciplined. You have to do it over and over. Every day you go, even in the beginning, you don't see any immediate results. And over time, your body starts reacting to the practice. So it's exactly the same here. Right. The thing that's important for me in phase 4 is that the market has a rhythm, but you have one too. You get to know the market rhythm, which I already spoke about now, but now you have to figure your own one out. You have an action plan. How are you going to study these things? When are you going to study these things? When are you going to practice? You have to make time for this, just like when you have to make time when you want to go to the gym. And this is up to you. Nobody can do it for you. Nobody can learn to trade for you. It's a language that you have to learn to speak by practicing. And this plan is absolutely crucial, guys. When I speak to guys, when I speak to people and I ask them, okay, tell me what's going on. People that are stuck or in the beginning and they don't feel they don't get a grip on it, normally they haven't got an action plan. They just now and then decide they're going to look at a little bit and read a little bit here and watch a YouTube video here. That's not going to work. You need structure. You need to know what you're doing. We've got enough even just within our I'm going to show you very quickly on our website on the education part, just the short educational videos, especially those ones in the educational articles. Watching, reading short ones, and then the articles is a bit longer. You have to make time to go and watch and read those things. That's part of studying. So you're actually studying applied economics if you learn to become a trader. Right, and again, it's just simply the mastery process you're going to do. No shortcuts, guys. Okay, very important. Questions like what is the routine I'm going to have, what I'm going to do, when I'm going to do it, how I'm going to do it. Don't go and buy expensive stuff. Use what you have. Keep your overheads low. This is a business, right? So where are you going to do it? Get a dedicated place for yourself so it's easy to go there and to focus. That what is also got to do with the plan. What are you going to study? Are you going to, spend 2 years looking at a lot of YouTubes? It's not going to help you. You must find value. You must get the basics, and you can get this with us. So, right, very important, guys tend to forget that their families are watching them. Make your family, be open to your family, your wife, your children, your partner, whatever. Tell them what you're busy doing. You're studying. Help them, keep them involved so they can hold you accountable. Especially when the temptation comes to when you start to get to know this, and now you want to, you take your focus from developing the skill to making money. The moment you do that shift, guys, it's the beginning of the end. You're already starting to mess with those beautiful patterns that you're starting to build up. Then you'll have to just later go back and continue. So no shortcuts there. Okay, routine. Just a very quick example of that. If you look at only the daily time frames if you're working in the day, then you check Monday to Friday, usually about in South Africa, around about 9:10 after the New York market close. That's all you have to check every day. You check a couple of instruments, and you take your decisions based on the language, what the market is saying. If you have time to look at the 4-hour time frame, you check Monday to Friday from 8 a.m. to 4 a.m. If you're in South Africa. There's a couple of candles you can check, and you check what is the structure on those things. Obviously, with the higher time frames, the opportunities are not so much. You might sometimes get on the dailies 1 or 2 options on or opportunities on a weekly basis or a monthly basis. On a weekly basis, on a 4-hour, you get 1 or 2 opportunities in the instrument. So you have to be patient. If you drop down, okay, this is a big drop, but the 5-minute time frame, you can check Monday if you've got the time, Monday to Friday, and the best for those lower time frames is during either the London Open or the New York Open. So in this case, I chose the London Open. It's very nice for us. It's about between 9 and 10 in the depending on the daylight savings time. Right, so you have to go and figure your thing out, and that happens as you practice, as you get to know this. Right, and very, very important, don't forget you're not alone. If you get stuck, if you feel you don't have, you don't know what you're doing, you get emotional low. I've been doing one-on-one sessions with a lot of guys. The numbers are picking up well, so I'm going to start sorting them into groups. So because obviously I haven't got enough time, but I try every single day to take a couple of hours to help guys. So please remember, when you're stuck, when you feel stuck, that you don't have to stay stuck. Reach out, get help. You're not supposed to do this on your own. All right, the Skype support groups, like I said, I've got beginners, more experienced guys. Normally when there's enough people that tell me they want to talk about a certain thing like orders, or in the beginning just understanding the structure of the market, I will do more webinars. I will try and do more webinars about that, because the Skype, it's sometimes difficult in the day, and if I'm traveling in the evenings and so on. But the webinars is easy to listen. So I'll try and make more dedicated ones for you guys, so you can at your own time listen to these things and get to know the skill. The important thing is, if you have time, if you feel the need, just contact me. I always put my email up so you can contact me. Make a date, make a time, it's up to you, right? Okay, and then we book it. Right, today I want to spend a little bit more time with the automatic phase. What that means is you are unconsciously or non-consciously competent. That means you've been practicing, you have your schedule, you've been looking at the old charts. For those of you who've been to the seminars, you know that the professor calls his setup the failure swing a specific name. If you know the name, you've been practicing. To see those with my method, my strategy, it's the moving average spring strategy. Both of them are actually on the recorded websites, so you can go and find them there. The ultimate trading formula, and then the spring strategy, and that's what you've been practicing on old charts to see it. And if you get confused, I tell guys, draw it on a paper, right? So that you don't get you get that confusion, and then you start wasting time on a chart. You go back, you just look for that structure, identify the structure in the early trend. When you've done that, you've gone through the process of going on a demo, executing your trades, making your mistakes, trying, learning, growing, and now your demo account is growing. I want to emphasize that if you can't make a net profit over a series of trades, if you can't make a demo account grow, there is no way you're going to make a live account grow. The added mental pressure is like weights that's being added. If you can't bench press 50Ks, you're definitely not going to be able to bench press 150. And that's the jump between live and normally a standard account that people try to make a lot of money from, and the demo, and just the previous phase. You have to go through executing on a demo, learning to execute well, making your mistakes, learning, growing. If you do that, then at some stage, okay, you go next to a sense account, small pressure, and then if you can still build your account. I've got a certain way that I do that. Start with minimum lots, and then if you do a sample size of, you do good trades over a series of good trades, then you can lift your lot sizing. From there on, we build up to a standard account. Now, at some stage in that process, that stage 4, that whole learning process, at some stage there, you're going to feel this flow starting to happen. That's why I've got this river here. It's right. That's the best way to describe it. It just starts flowing. The neurological trees, neurological networks in your brain, the long-term memory, because of all the repetition, that muscles, that structures become strong, and it's just easy. Just like riding a bike when you've practiced a lot. You just get on the bike and you go. You don't even think about it anymore. So many of that actions have been repeated into your unconscious or your non-conscious, and then it's just you do it. You open a chart, and I'm going to demonstrate it for you quickly. What I do, because I train in the day. I look at the 14 charts that we've got in our FXTM signals. It's literally, I've got a profile here with all the 4-hour charts that I'm looking at, and in a fraction of a second, guys. When you've practiced those things, I've got the spring method, the simplified spring method set up here. As you can see, we're looking at the price. The indicators are just like a dynamic trend line here. I can immediately see 2-3 seconds. I can see this is an uptrend. It's busy in an uptrend. There's no early stage of a next trend. Here I can see it's a beautiful uptrend. So what I'm doing now is I'm scanning through my charts. It takes me a couple of seconds per chart just to scan through. This is an uptrend in progress. There was a sort of like a downtrend, but it didn't make our definition. It didn't make a second, but it didn't break the second top. So it's not good enough compression there for me. So just either a ranging market or the beginning of a new uptrend. There you can see something interesting. You can see there was an uptrend at that stage there. I decided this is in the early stage of a next trend. I took a setup there. My trade was engaged. My first take profits has already been taken, so I've got almost no risk here, and I can allow the market now to do what I do with my moving average spring strategy. The simplified one is I simply keep it on line chart until that happens, until it breaks through that I can see the trend, whatever beautiful trend was going. That structure, it's not the same anymore. Something is happening there. I don't care what happens. What happened there, that's not my business. My business is to look for this early stage of a next trend. I want to take a calculated risk. I'm listening to the market. I want to make money. This is a business. This is not a hobby. So I look for, I don't know what happened there, but I can see something happened. This might be the early stage of a next trend. And then this is where we put our let me just get it there. Oh, getting confused here. So at that stage, I go over to the candles. That's why I want to see what the emotions of the market is, and then let me just get that. There it is, and that's where I put my guidelines, and that's why I take a calculated risk. I've practiced this so many times, guys, that it's just effortless. I know what to do every step of the way. There's no emotions. This is going to be a good trade. Why? I see the structure of the market. I see there's a shift. There's a possible early stage of a next trend. Never am I assuming or even speaking that this is the next or the early stage of the next trend. Nobody knows, and I don't care. It might be, and I'm going to take a calculated risk. What happened here is the market pulled back, and as it was going down, and remember, there's enough time. It's 4 hours. I put in my entries, my stop loss. When I did my first one, I brought my take profit a little bit lower. So it's a break-even trade now, and now it's very easy. Actually, then just change back to line charts so I don't get confused or bring any clutter in. And in this case, what happened is very simply the market is now speaking. The market gave me an opportunity to take a calculated risk. I listened to the market. I didn't try to tell the market what to do. So, and now this trade is busy going. It's either going to hit my second one, my third one I'll do when the price structure changes again. Right. So no fuss, no nothing, no worrying about it. And yet the same thing happened. Yesterday, what I saw was this beautiful uptrend here. Something happened here. I don't care. With the spring moving average spring strategy, I like the price to go a little bit lower or down this break the 34 spring moving average here. It went up, it went down. I took my calculated risk there, and the market engaged, and it's already taken my first take profit. Right. So this is how it flows, guys. It just flows. I don't worry about that. I'll monitor that thing every 3 or 4 candles. That's it. Everything's done. It just flows like a river. All right, what's happening here? Beautiful. It's a downtrend. I can see something is happening, but it's not enough for me to get in, not even to change to candles yet. It needs to break. It did, and now it needs to pull back. If we'll see this huge candle here. If it now starts turning back in the next 3 or 4 candles, it's Friday, so that's not really going to happen. But if it does, it pulls back and then starts going up, that's when I see my setup and I look again. So I'll possibly note this one down to monitor 3 or 4 candles again later. Beautiful downtrend, 2-3 seconds, nothing. Yeah, the same thing happened, except it hasn't been engaged yet. So I saw this is not really an uptrend. I just saw this massive up movement. Now the market has difficulty going past here. So and yeah, it's not actually a legal trade, guys. Normally I like to wait for a nice uptrend, 2-3 higher tops, higher bottoms, and this is just a whatever you call it, a ad hoc trade. So because I believe that if it breaks down there, I'm willing to take a calculated risk. Right, so it's not a too good of a setup here. This is what I call when you've mastered the slow part of trading, when you've mastered the the normal rhythms, these things, then at some stage, it's just like when you're driving a car and you've practiced and you can drive very well now, and you're driving, and so many of the actions is into your non-conscious that your brain now as you can actually drive 120 and think about other things, right? Because so many of the actions are into your non-conscious, your brain can allocate more resources to thinking while you're even doing something that you've practiced a lot. Now, this is what's been happening, or this is what happens. I call it fast trading. Slow trading is when you're still mastering the basics. Fast trading is when you start seeing such opportunities and you take a calculator's risk as well. So this is niche opportunities, not your core basics. And every person, out of the uniqueness of that person, will start seeing some that they are willing to take a risk with. So the big problem for me is the guys don't understand that you have to master the basics first. If you never learn, if you don't drive well enough, you can't drive on the highway and think about other things. On 20 on the highway and think about other things. You must have mastered the basics first. No shortcuts, no just buying a car, getting in the car and going on the highway. You will just make a mess. You'll just make an accident. You have to take the time to master the basics first. And then, yes, then you can drive about any car and you can drive on any highway and so on, right? So then these niche opportunities that you like, that comes out of the way you see, will come up and you can take them, but you will always take a calculated risk. You always respect the structure of the market. There for me was that massive up spike there might cause a correction there or a pullback there, and I'm going to take a risk by taking, by seeing if it does. If it goes past that, I'm willing to take a calculated risk. Okay, let's jump. Beautiful uptrend, uptrend, uptrend very quickly. Broke through. If it pulls back, I might think about taking it when it starts going up there. It's Friday, so we'll see on Monday what happens there. The point that I want you to see is how quickly it goes, how quickly you can see if there's anything. Nothing, nothing, nothing. And what's interesting now, depending on your time, I train during the day, so I only watch the 4 hours, and then after I finished my work, then I look at the shorter time frames. But if you've got time in the day, depending on your schedule, I've made a profile here for the 1 hourly. So I sweep, then you can sweep through the 1 hourly, and you'll see immediately the structure is different than the 4 hourly. The only time when I will be careful is if I've already got a setup on the 4 hourly. I won't, immediately put another setup on on just 1 or 2 time frames below that, because they might, it will be correlated. But sometimes you see on the 4 hour nothing, and on the hour you see a possible opportunity. So quickly go through here. There's not really anything, it's just breaking out of a range. Uptrend, this might be something. If it breaks past there, goes up and starts coming down again, that might be an interesting one. Again, it's Friday, so I'm a bit careful. And beautiful uptrend. And that's what I want you to see, how easy it is to identify these things as you practice and you practice. Nothing there, it's an uptrend. There was the early stage of a downtrend, but not again. Some ranging there. Guys, if you practice this over and over, it just flows like a river. All right. Nothing there, bit of ranging there. And that's the idea. So, and you can go through this. Any single time frame has a structure. You might not find the one on the higher time frames. If you go to the lower time frames, the opportunities get more. There's more noise, so you have to train harder. You have to look more careful. But sometimes you can just see the structure, guys. It's very, very nice. So and you take your decisions. With the lower time frames, you need to practice more to incorporate those noise. That's why most of the good trades are in the London session, where there's a lot of liquidity. After the markets went to sleep, if you can put it, there's still people trading, but not a lot. In between the New York and or in between the London and New York, as well as after the New York, then before the Asian session, then you get these lulls in the market. It looks about like this. So this is the times when we get opportunities. You see, this is a New York session here. This is the beginning of where's 12 o'clock? Let's look for today. This is 2, 3. This is the beginning of the day here. It can be oh, I wanted to say this is a 1 minute. It's a bit confusing. Yeah, this is 30 minutes, so you can see no real structure here. No structure there. Bit of an uptrend. Might have some hope there. So immediately you can start seeing these opportunities and you decide is it good enough, or you're going to take it or not. What's interesting in phase 5 or step 5, when you are unconsciously or non-consciously competent, is you, immediately when you look, there's so many things that you've been practicing that comes up together. It's like almost like a warning signal, or I don't want to call it a gut feel really, but you look at this and you have a feeling, okay, this one's got potential. Or this one has not got potential. It's difficult to describe. It's like when you become proficient, like this in a language. I call it the poet of when you become a poet in that language. If you've spent so much time for it, you've got a passion for that language. You think about things that other people don't think about. When you write a poem, um, nobody else is going to be able to copy it because it comes out of your uniqueness, all your practice, all the hours you've put into that language. And another guy can have also for the same language, he can have a passion, but his poems is going to be different because he's different. Where he grew up was different. His uniqueness, his unique profile is different. His way of thinking is different. His personality types and so on. And it's exactly the same things I want to tell you guys what happens with this language. I call them, and that's why I do this training. I'm trying to help other guys to become poets of the market, the guys that have a passion for it. When I can identify those guys and train them to master the skill, I always tell them when you get proficient, please give something back. That's when we start using. I asked them to become strategy managers on our copy trading system at FXTM, and then that means other people can start following them. Guys that don't necessarily have the passion for this, they don't want to become poets of the market, which is good. Not everybody wants to become poets. You need doctors, you need lawyers, you need um, plumbers, electricians, other passions. That's what you follow, but you still need to manage your economics, and then those guys can with minimal training and just a basic strategy, which I call anyway the orchard strategy. They can start following decent strategy managers, guys that know the language of the markets, that are poets, and build up. It's a little bit slower, but build up a decent portfolio as well for them. So that is my purpose. It's like burns like a fire on me, because I see outside. I see how many people are just falling around. They don't understand economics. They don't understand the management of their own resources. That is what economics means. It's just a careful management of all your available resources. I see people suffering because of mistakes they made, because of ignorance, because they don't know. And these wonderful opportunities like Forex Time Invest, this business opportunity, the applied economics, the online trading, which is busy opening up because of the fourth industrial revolution, technology giving opportunities to normal people like us, keeping the overheads low. It's making a major difference if you take hold of that opportunity and you start using it. Anyway, got a bit sidetracked there. So like I said, we the last stages, we're just going through these things. Every single time frame, we've got a structure, and we decide. Obviously, this is a good uptrend, um, and this is a classic case that I just want to talk about. You can see the structure of this line, of this thing. For me, this is just one movement. You might not get another guy has got a different profile. He's another poet. He also mastered the basics, and he feels he's going to wait. That's movement enough for him, and he takes a calculated risk there. And there, you would have made a small profit. All right. So that's if you've got the skill, then your own uniqueness will come out in this. You will start learning how to see the structure in your way, your own personal way, and you will start managing, or taking the calculated risk, and you will start, let's see how that structure look, and you will start taking a calculated risk and then managing that risk, and then certain things are unlocked. So that can only happen once you've practiced it over and over and over and over again. You can see here on the higher time frame, I've got my trade open, but on this time frame there was nothing there. It was just a couple of, some ranging. And so we watch and we look for the opportunities and we take them. And it becomes completely effortless, guys, completely effortless. It's like almost like walking in an orchard with a lot of fruit trees, and you're just simply watching and you see a lot of green fruit. This is a green one. This is a green one. This is a green one. There was a ripe fruit. And if it's like that, I walk closer and I see a possible opportunity and I decide am I gonna pluck this thing? Am I gonna take this calculated risk or not? Sometimes you pluck it, it looks fine, and it's just, something happens and the structure is broken and you protect your account, which is still good. Your stop loss is hit, but it's a good thing because you protected your account, you respected the market. Then it's just like a fruit you picked and there's a worm inside. And as you get better and better, you start to recognize sometimes before the time you've got that feel, is there a worm in this one or not, and you leave it. But you never know, you don't really care. You just go looking for another fruit. Right, so in this case, if you took that calculated risk, then you would have had a nice profit already in your pocket. And another thing, when I look at this, I've got no feelings of, oh, man, why did I miss this thing? I don't care. I can miss 20 in a row, doesn't matter. When I look, I respect the market. I see what I see before me and I listen to the market, and I take a risk only when it's at that time that I'm looking if the opportunity is there. If it's not there, then you skip and you look for it. You don't pluck overripe fruit or try to pluck it. It's always it's almost like when the opportunity is missed, then it's a green fruit then again. So you just leave it. A lot of guys blow their accounts because they try to enter after a signal has been given, and then the market does strange things and they're not able to manage the risk properly. So we don't do that. You practice that out of your system. Right. No opportunities. A lot of eyes. We've just had an issue with some traders that said that, but they specifically with this, the NASDAQ here, the minimum lot size is 0.1. And this guy said no, but they don't want to trade with us because they're looking just for the NASDAQ, and they want fewer lot sizes and stuff. There's a problem there. If you know the language of the market, if you respect the market, then you can trade on any time frame, guys, as I've shown you. Any time frame, any instrument, especially on the lower time frames, you need small risk or small spreads. If a guy tells me, no, he's focusing on like the FTSE or the NASDAQ or the DAX or whatever, I know there's a good chance that guy's a cowboy. That means he wants to make a lot of money very fast. And those guys, there's only one thing that happens to those guys wherever they go. They just lose their money. It's just a question of time. So they might have a lucky break sometime, but to be consistently profitable is difficult for them because of that. They haven't unlearned that greed factor yet. This is a business, so not a lotto scheme or something. Right, let's look at another one. Now I go to the 15 minutes. And again, the same thing. Is there a structure or not? You see the structure looks differently again. There was an opportunity, but this is where I want to emphasize the noise factor. That's why I use these two indicators. There's a lot of noise. If that thing was nice and down and it broke through the 34 and it came back, I would have looked at it, but it's still in the noise factor for me. In the lower time frames, those noises causes a lot of false entries, and that's why it takes a lot of practice to get used to that. And the practice means you're going to take calculated risks, and then you're going to protect your account over and over and over again. But as you do it, as you practice in the beginning on a demo, getting the precise way you put your entries in. Some guys use scripts and EAs. Some guys put it manually. If you have to put it manually, you have to practice so you can do it very fast. Because in the lower time frame, sometimes the market just moves, and you have to input your stuff quick enough. So that thing I won't take. I will just leave. There again, it's in the noise factor there. Don't really like it. Another factor here. It's Friday evening or Friday afternoon. The markets, as the volumes will be settling, then the amount of traders that are trading will be tapering down. What happens most times in the markets is Fridays, the bigger guys start taking profits. So it's still possible for you in the early to make a profit, but you must be careful. So, all right, nothing here, just a downtrend. So what I'm trying to illustrate to you guys is the flow that we have. There's no stress, guys. There's no worries. The market's going to give me what the market's going to give me. I'm walking through this orchard, and I'm not trying to force the orchard to do anything for me. I've learned I don't pluck green fruit. It just doesn't taste well. It doesn't work. Taking trades is not that's in line with what the market says, the early stage of the next trend. Even when I see a ripe fruit, I walk closer, I put on my candles, and I look, I wait. I've gone past the stage, and that happened a lot in phase 1 and 2, where you impulsively take trades. Why do you do it? It's very, very disrespectful. That's an old gentleman. That's a seasoned trader. That one of us was one of my seminars in. I think it was in Bloemfontein. No, sorry, Rustenburg. He he made a comment quietly on the side while we were talking, and it just struck me so deep. He said it's very disrespectful if you don't listen to the market. So I've remembered that. I remember that for the rest of my life, and I've just worked it into my frame of reference as well. So I want to respect the market the whole time. So and that makes it much easier. All right, nothing there, nothing there. In the lower time frames, when you see these spikes, you have to be careful. So nothing there, uptrend, nothing there, some ranging, nothing there. One other thing I want to say, which is very, very dangerous. You get guys that trade from the higher time frame to the lower time frame. Now, what I'm saying is just my opinion. You have to focus on the time frame, the structure. You have to respect the structure and the time frame where you are. If you try to trade or try to use, I've got a strategy where you must look at 3 different time frames before you enter. Then many times when you enter, it might be too late, or uh, I don't know. It's confusing. It brings in a lot of clutter. That's what it did for me. When you look at the structure there and you take the calculated risk here, here's nothing. Let's see if we can find something there. If it's not there, it's not there. I don't care what time frame it is. So the multi-time frame things, just for me, well, I was trying that a long time ago. It was just very confusing. So and later I realized that it's almost disrespectful in the sense of uh, um, the structure is, if you look at, for instance, 3 different time frames, each time frame has got a different structure. Especially with slow trading, when you're still mastering that basics, it's dangerous. Yes, when you've mastered the basics and you understand things like fractals, patterns within patterns. When you're at a certain time frame, for instance, a low time frame like time frame like a 5-minute or 15-minute, you've taken a trade, it's gone. Where you have your first take profit, almost no mental stress. You've got your second take profit, where now you've got a net profit in your pocket, even though the market is still open. You've got still part of your position open. Then and then only, yes, can you go to a higher time frame and manage the trade there. It might be part of an impulse wave, a higher time frame, and you get a lot of more profit. That's part of fast trading. But then to be able to do that, you must have mastered slow trading. Let me show you what I mean with this. I took this trade on the 4-hour. So what's happening here is the following. I've entered, I've taken my first take profit, no more stress. I'm waiting to see what the market will do. If the market reaches here, everything is fine. If the market touches this take profit, then it means that I've already got a net profit, even though I haven't moved my stop loss there. So I'm still giving the market room to breathe. If the market keeps on, after I've taken that one, after I've mastered the basics, not for the beginner guys, then I might consider taking this last one out. Let's just mark that one well. And if this is part of a if I see this becomes part of a higher time frame, it goes now, it goes past, it continues. It might be a higher time frame impulse wave here. Then what I'll simply do is I'll remove the last take profit and wait for this higher time frame series to finish, so you get more profit out of it. That's one way, but it's fast trading, guys. It's part of the it comes in phase 5 after you've mastered these things, after it starts flowing. Then you're not confused anymore. You're not jumping between time frames to decide where to enter or where to get out, how to manage your risk. All those things are in your memory banks, thick neurological trees there because of all the practice, and now you're busy optimizing. That's where that extra intuition comes to play. Never ever do we try to think we know what the market's going to do. Okay, I think I'm going on too fast here. Time is almost up, and I see there's a couple of questions. So never ever do we break the basics. We don't try to force the market to do anything. We don't try to predict or anything. Right. I think let's go back there. And just one thing before I go to the questions and answers, or the questions. Anytime that it happens that you do decide, okay, I'm just going to press this thing, and you get some losses and you get hurt, there's hope, guys. That's why I've got this life-saving device here for boats. There is hope. Just pause, take a step back, go back, learn, look at the mistakes you made. If you made some impulsive mistakes, look at them objectively and learn from them, make them valuable. Then it becomes part of the learn, that I tried, make some mistakes, learn, and now I'm going to grow phase. Then you make it valuable. That's very important for me. In the end, with any skill you master, patience and diligence is the thing that's going to get you from step 1 to step 5. Patience and diligence, just like gymming, just like any skill. Right, let me just get my, I'm going to go back to the first one, so you can see my email. There's my email if you've got questions after this. Let's see how many questions there are that I can get some answered. Sidwell asked, thank you, sir. Can you show us a place to buy and sell orders on the 15 and 30 minutes? I think I might have answered that question. We can quickly look. All that we're looking for, Sidwell, is for some proper structure. The market breaks through there, starts going up, then I'll go to my my candles, and I'll take the thing around about there. Let's look for one thing where you can see quickly if we have a possible place. Let's use this one. Let's assume no, I don't like the downtrend. There's still a downtrend going. No, busy part of an uptrend. Doesn't look like we're gonna get a nice one here. Let's use this one on the 15 minutes. Where do you see? Let me see if I can get a good example now. There's a very famous quote by that old gentleman of the markets. What is his name now? It's out of my mind. Where he said the markets are instruments for transferring the funds of the impatient to the patient. So that's very important. Let's look at this one. I like this one. So let's say that's a downtrend. That was a rather decent downtrend. So it jumped up here. Okay, this one is disqualified because of the spike here. So just to answer your question, if this was a nice one, the spike wasn't there, it was a bit of a better structure, the spike makes it dangerous. Then let's say the structure was like that. That is how I put my guidelines. That's my entry, and that's my stop loss, and there I take my profit. This is not a good example. I just can't find a good one now to show you. Right, let's go back. So we'll also ask, use a sense account and the spreads are too much. I can't place orders. So the purpose of a sense account is not to start making serious money yet. With the sense account, we are moving out of the demo account where we practice this structure. We practice respecting the market, seeing the structure, taking the calculated risk, using those wave structure, whatever method you use. Might be the failure spring method, a different one. But the principle will still be the same, and then managing our risk. That's what we want to practice there. If you can execute it well on a demo, we go to the sense account. Even if the spreads are a little bit high, what we want to do, we choose in the first place, you choose instruments that the spread is a little bit lower, and we practice that on a live account. We practice entering the trade, seeing the structure, taking the calculated risk, managing the risk, building that skill. So on the sense account, what you're going to do is there's like Euro USD and so on. The spreads are low, so you can do it there on the lower time frames, but you'll get a lot of opportunities in the higher time frames, 30 minutes as well. So keep practicing it there until you make a sample size. We call it a sample size of good trades. You can take good trades after another. So the amount of money you make is not so important. Then if you can make good sample sizes of good trades, respecting the market on the sense account, then we start moving up, putting in a little bit more capital, and we move up to a I can also already deduct that if the spreads bother you, there must be the lower time frames. Then you go to ECN account, where you've got lower spreads and a small bit of commission, and you just keep on doing the same thing, just like I showed you here. Effortless, you just look for the opportunities, but yes, you have to choose a pairs where your spread is, then it's going to be low, and you build up your account that way. I always start on a demo and a sense account, and on a normal account or ECN account, standard account, whatever. Tell the guys just to settle in, start with the lowest you can go, 0.04 with our method, because we take partial profit, and then just build it up. If you can do a couple 10 trades or so using that, pushes the lot sizes up a bit. I see just too many guys getting burnt, adding too much weight. They add too many lots too soon. That's like bench pressing with a 50 or 100, and you just go and put on 100 more. It's you get a period. So, and then you have to die in sales anyway. So that's my answer to that question. Sunday's asking, please, I want to listen again. Yes, Sunday, you can just email me, and then I'll send you the. It won't be up on the website yet, the recorded webinar, but it's definitely recorded on the GoToWebinar. I'm going to send you that link so you can watch it again. Right, guys, just for interest sake, I'm going on. I've got annual leave, so I'm not going to be available from Monday. Today, I'm still going to send out emails and so on, but then I'm going to be obviously quiet because I'm on leave. And then it's all the holidays. I've got some days off until the 6th of January when I start again. So if I'm a bit quiet, forgive me. Okay, it was good talking to you guys. I see our time's up. Like I said, the learning process, you try. The biggest mistake people make is not trying. You have to manage your risk, yes, but not trying means you're doing nothing. You cannot learn. If you try something, even if it's something small, it means you can learn and you can grow. That's why I love this business. You can try on a demo account. There's no real risk, but you're trying something. That means you can learn and grow. So I'm looking for poets of the market. I'm looking for guys that have a passion for this. Contact me. And I also want to train the rest of the guys, even if it's just if it's that copy trading system where you can follow somebody else that knows what he's doing. So there's a whole system there for other people that haven't got the time or they haven't got the passion to become poets of the market themselves. Right. Have a nice weekend and see you soon. Goodbye.